Good afternoon, everyone, and thank you for joining us today at this Compliance Forum event on culture and compliance and addressing non-financial misconduct. So my name is Sona Ganatra and I head up the regulatory practice here at Fox Williams. And I'm joined today by my colleague, Marion Bloodworth, who's an employment partner who specialises in advising financial services firms. So in this session, we're going to be providing you with an update on addressing non-financial misconduct. And it's very timely it's because some of you may have spotted that a few hours ago, the FCA finally provided their update on their approach to non-financial misconduct. It's not given us very much time to digest the 82-page document that was released this morning, but what we will do in this session is provide you with a refresher on the history of non-financial misconduct, where we currently stand, and also a very high-level overview of what has been proposed by the FCA, and then some practical guidance and tips on what you can do going forward to ensure that you, within your compliance functions and other functions within your organisation, are ready for the rules and when they come into force. And on that, I will hand over to Marion.
Thank you, Sona, and hi everybody. Welcome to the session, as Sona says. So, where are we now? Before we come to today's news, we thought we should just have a reminder of why this is such an important topic. So in a minute, we'll just do a quick refresher of the history of non-financial misconduct. We'll look at some of the recent themes that have come out of the FCA Upper Tribunal, and of course, we'll talk about the update from the FCA today. Now, you might wonder why we'd put this event together today. We'd hoped very much, as Sona said, that we might have had the rules already, and we wanted to be able to talk about that. We didn't realise quite how tight we were cutting it in terms of time, but we will be able to share with you, as Sona said, what we've already been able to glean from the paper from today. But obviously, as you'd expect, it does bear a little bit more review and consideration. And you might be saying, why is this important to me? I'm in compliance, or I have compliance within my area of responsibility. But as we all know now, and it has been made very clear from today's paper, people risk is conduct risk, and conduct risk is a regulatory risk, and it's therefore something that falls very much within the compliance ballpark and is a regulatory issue. And Son and I probably both say we've been around a little while now, and there was a time in our careers when the compliance team and regulatory lawyers like Sona were in one part, and me in employment law, and our HR colleagues were in another. And quite often we didn't necessarily speak quite so much about these issues, but I'm sure it's true for all of you, and it's definitely true for us, that very recently we have seen a real coming together of all of those functions. And it's actually essential that we all talk to each other, compliance, HR, legal and risk, because allegations of non-financial misconduct and the consequences and the reporting of that, how your firm should react, bring all of these experts together, and everybody needs to play their part. So if we look at the current landscape, that's something that Sona is going to take us through, and then I'll go through a timeline.
Thanks, Marion. So to start with, just a very brief reminder, as the rules currently stand, the FCA handbook is silent on non-financial misconduct. So the conduct rules, the fitness test, they don't specifically relate to or give examples of behaviour that we now know as non-financial misconduct. So really what we've been left with is this development of this concept of non-financial misconduct since around 2018, and reliant on the FCA's speeches and guidance that they've given through those, as well as a series of cases where the FCA has taken action either to prohibit or fine individuals where their behaviour has seen as unacceptable. And so really this has left firms in a bit of a difficult position as they're trying to navigate what they think the FCA want, but without actually having the rules or the specific guidance clearly set out in front of them. So what we've done for you now is create this timeline, which will give you a bit of a potted history as to where things have developed and where they've come from.
Thanks, Sona. And if I kick off perhaps, because some of this started very much in some respects in the employment law world, because it was in 2018 that Megan Butler at the FCA was effectively forced to write a letter to the Women in Equality Select Committee, who were doing an inquiry into discrimination at work and the use of non-disclosure agreements or confidentiality clauses. And she wrote and confirmed that in the FCA's view, sexual harassment is misconduct. That sentiment was then echoed again later that year in December 2018 by Christopher Woolard at the FCA, who said non-financial misconduct is misconduct, plain and simple. We then move into 2020, and in January of that year, there's a Dear CEO letter where again, the FCA make really clear that from their perspective, poor culture is a key root cause of harm. And it's really clear that they have started to have their lenses on all of these issues around non-financial misconduct and behaviour. We then get to November, and Sonna's now going to take you through some of the other things we've seen that start to give you an indication of the direction of travel.
So November is where we first had a series of cases where the FCA prohibited individuals following their conviction for serious sexual offences. And what the FCA said is that because of those convictions, those individuals lacked integrity and should be prohibited from acting in the financial services system. And they took a similar approach in relation to Forsyth and Frensham and said that both of those individuals should similarly be banned from acting in financial services. One in relation to allegations that he had lied to the regulator about tax avoidance arrangement that he had put in place, and in the other, in Frensham, in relation to an allegation and then a conviction of sexual grooming offences. Now, interestingly, as we moved into 2021, those two individuals appealed or referred to the upper tribunal, and they were then had contacts from the upper tribunal to say that actually those decisions by the FCA were incorrect. And actually, what should have happened is that the FCA should have been much more clearer about the fact that there had to be a link between those people's behaviour and their conduct and actually the professional role that they were conducting and the FCA statutory objectives. So the upper tribunal actually started taking a different direction and said that the FCA needed to roll back. We then moved into 2022 and the FCA seemed to continue down its current vein, and it actually banned an individual following again a conviction for a serious violent assault case.
We then move into 2023, which is particularly relevant for today's talk, because that is when we all saw two consultation papers, and you might remember this. The FCA and the PRA both consulted around diversity and equality in the financial services sector. They obviously weren't completely aligned because quite often they'll do a joint paper if they're seeking the same endgame, but they had slightly different papers at this point. At the same time, so this is around September, October 2023, the Treasury Select Committee inquiry is on foot into sexism in the city. Now, both of those consultations and inquiries close at the same time. And again, you might remember this was December 2023, and members of the FCA, I think it was Nikhil Rathi, found themselves in front of the Treasury Select Committee being grilled about conduct in this sector and what they were doing about it. So we all knew that there was going to be quite a bit to come. We didn't realise perhaps quite how soon it was going to come, because in February 2024, some of you on the call might have been on the receiving end of that FCA NFM survey, which if you were involved, you will know was quite far-reaching, quite onerous, and gave you a very short period of time in which to supply a whole set of data to the FCA covering 3 years, I think it was, of your business, all the allegations that you'd received, how you'd dealt with them, what the consequences had been, whether they'd ended up in tribunal, whether they'd ended up in settlement agreements. And it was really clear, we felt at that point, that the FCA were getting their teeth into this question and this issue of misconduct in the workplace. Then in March of 2024, we had the Treasury Select Committee inquiry, Sexism in the City report, to which the regulators initially sort of responded. The government also responded, and then there were further comments in May of that year. Then you might remember this, that in September 24, we were all waiting for the outcome of the FCA and PRA inquiry, and we found out that actually that we were going to get something at the end of the year. So this is when we all thought we were moving towards the end of 2024 to find out what they were really going to do about non-financial misconduct in the workplace. In October 24, the FCA then published the outcome of that February survey, and there were various threads and comments coming through there, and the main upshot being that firms needed to do more to manage non-financial misconduct. But they said that they would pick this up in these final rules that were expected at the end of the year. At the same time, coming back into my world, the employment law world, the Worker Protection Act came into force, and this is the bit of employment law legislation that puts a positive obligation on employers to prevent sexual harassment. And that was quite a change, and it forced a lot of organisations to look at the steps they were taking internally. And then there was one more case that Sonna would like to talk about.
again, we were waiting for sort of further guidance and further input from the FCA. And in October, another case, an example of the CEO and former founder of Wise PLC, Carmen, he was determined to have been in breach of the Senior Manager Conduct Rule 4 for not promptly disclosing information to the FCA. And this was actually related to capital gains tax liability, so his tax affairs effectively in his personal life. And what the FCA said is that they would have been expected to have known that there had been concerns and issues arising there, and then they expected to have been put on notice of it, and he hadn't. So they fined him £250,000. So what happened after that is that we reached the end of 2024 and there was still silence from the FCA, so no further updates, and effectively just a notification to say that the response and update on non-financial misconduct was being delayed again. And it really wasn't until March 25 that we had something substantive. And at that point, the FCA confirmed that it was still focusing on non-financial misconduct, but it would update the market at the end of June. But at that point, what it did say, and this was also following criticism or commentary from the Treasury Select Committee, is that it would abandon the proposals on reporting requirements relating to diversity and inclusion. We then had a series of further cases. So the Crispinode case was released in March, which the decision notice has been referred to the upper tribunal. And in that case, that was a sort of long-awaited decision because firms were trying to work out how the FCA would approach this particular case when there had been allegations very publicly made about Crispinode's behaviour over a series of years. And in that case, what was interesting is although the FCA banned O'Day from financial services and fined him 1.8 million, the case itself actually was predicated on O'Day's conduct in relation to governance and culture and the fact that he had bypassed the processes within the system in his firm in order to protect his position. So it really wasn't a case about his non-financial misconduct outside of the workplace or sometimes within the workplace. It was really about how he had created cultures and governance and sort of bypassed those within the firm. We then, a few days ago, had the upper tribunal's decision in relation to Jess Daly. And actually, in that case, the upper tribunal upheld the FCA's decision to ban Jess Daly, albeit they did reduce the fine a little bit, and actually said that his conduct in the way that he interacted with the regulator and approved a letter that had gone to the regulator about his relationship with Jeffrey Epstein showed that he had lacked integrity because of the way that he had approached that particular communication. So fast forward to today, and actually finally we have had an update from the FCA. So two things have happened. So one is that they've actually published a policy statement, and then the second is that there is now a further consultation period for guidance on the new rules on non-financial misconduct. Now, what we should expect to say, and we'll talk about those in a moment, is that in September next year, what will happen is that the scoping parts of those changes, so the fact that the rules will relate to all types of Part 4A firms, will come into force. But what we don't know is what's going to happen to the actual rules. So there is a consultation which opens today and closes in September this year in relation to the proposed new guidance. So a brief overview of what you can expect to see in this paper. So as we said, it's been published today. It's a consultation paper which sets out revised rules and further consultation on the guidance on non-financial misconduct and the changes that have been proposed to COCOM. Again, it also sets out the changes and proposed new guidance in relation to the fitness test and provides for a consultation period around those. But what the consultation paper does make clear is that the proposed changes that they had previously suggested in relation to cons, so those are around the threshold conditions, those have now been scrapped. So we'll talk about that in a little bit more detail now. Just to remind everybody, what the FCA had actually proposed in the consultation paper 2320 was a significant number of changes to the handbook. I've sort of categorised them here in three buckets. So the first one was a set of changes in relation to the COCON rules. And what the FCA made clear was that behaviours such as bullying, harassment, discrimination, and violence towards colleagues could be deemed as breaches of Conduct Rule 1 and 2. And what they made clear is that the behaviour had to be in the workplace or in related scenarios, and they gave a table where they sort of set out different types of situations which would be deemed as workplace behaviour. And what they also set out is that if you are a senior manager who's been made aware of non-financial misconduct and you haven't taken steps to address that, that could also mean that you are in breach of Conduct Rule 2 if you're not taking adequate steps or reasonable steps to address those issues. The next bucket was changes to the fitness test, and what they made clear here is, again, all sorts of non-financial misconduct behaviours are relevant to whether an individual is fit or proper to perform a regulated role. Now, here what they said was that it's not just behaviours within the workplace, but it's also behaviours outside of the workplace that are relevant. And you may remember that there was, as well as issues of, say, for example, domestic violence or sexual misconduct outside of the workplace, the FCA also referenced morally reprehensible behaviour and said that that sort of behaviour is also relevant to whether an individual is fit or proper. And a firm has to take that sort of behaviour into consideration. And the reason being is that if anyone behaves in that way outside of the workplace, that's an indication that they could be a risk to the financial services system. The FCA also made it clear that the rules around regulatory references do also include non-financial misconduct. So if you are aware of non-financial misconduct, that may be something that needs to be disclosed in a regulatory reference, even if it's not necessarily mounted to a disciplinary action off the back of it. Now, importantly, the proposed changes back in September 23 also said that a firm may not be deemed to be suitable, so to meet its threshold conditions, if it tolerated or failed to deal with non-financial misconduct. So that obviously was quite a huge step forward in terms of this approach to non-financial misconduct. So where are we now? So what do the new rules say? So briefly, what we can see is that the new rules broadly bring across all of the changes that they had proposed in relation to COCON. But what they've done is made some slight changes and some tweaks. So first of all, what they have said is it's clear that non-financial misconduct is still proposed to be a breach of Conduct Rule 1 or 2. However, they've made it really clear that if it is going to be a breach of Conduct Rule 1, that it has to be deliberate or reckless behaviour. So it has to actually show or demonstrate a lack of integrity in order to meet that threshold. And the FCA has given more examples of when that behaviour takes place within a workplace context, because if you may remember, having looked at the previous proposals, there were still some gaps in what amounts to a workplace environment, what sorts of events are actually related to work. So what the FCA have done have expanded that table and given more examples of when workplace behaviour is engaged. It's also given further guidance on what it means to be serious, so how serious behaviour needs to be before it amounts to a conduct rule breach. And it's actually given a bit more information around subjectivity. So as you may recall, previously the conduct rule proposals were focused on the subjective response of an individual. So did that individual feel intimidated or harassed by the individual concerned? And what the FCA have tried to do is sort of balance that out a little bit and say that it needs to be some reasonableness within there as well. So was their response reasonable? Importantly, what the rules have done is also try to sort of bridge the gap between, there was a potential distinction between banks and the application of COCON to them, and also non-bank entities. So what these rules have said is that there won't be a distinction, that these changes to COCON apply equally to all types of firms. So Although the FCA have really focused on that in the consultation paper, I'm sure many of you on this session will be saying, well, actually, even though we're not a banking entity, we were looking at these proposals and looking to apply them in practice in the same way. So I don't think necessarily that's going to have the same sort of huge impact that the FCA is perhaps focused on, but it is important to sort of make it very clear that the FCA has the same expectations. So briefly in relation to the fitness test, again, it's broadly the same rules that have been proposed this time round. It's clear that conduct in one's personal life is still relevant to fitness. But what the FCA here have done, which I think is a good thing, is take out some of the language that was causing concern in the previous proposals. So examples of the sort of morally reprehensible behaviour, what the FCA has done is accepted that adds too much subjectivity to that, and it's really difficult for firms to understand. So they've taken out that language. But what I would suggest is that actually it's still leaving firms in this very difficult area where they're still trying to make moral decisions on people's behaviour. What the FCA have done, which is actually really interesting, and I urge you all to read, is talk about the use of social media, in particular, because I know there's been a lot of concern recently about particularly what's going on in the world at the moment. Employees making comments on social media reflecting their own personal views that may be offensive to people within the workplace. And what the FCA have said is that they don't expect firms to be sort of monitoring people's personal lives, but when it comes to these sorts of social media posts, making a post that may be deemed offensive or discriminatory to other people within the workplace does not mean that that person is not fit and proper. And it's only those sorts of posts that you need to take into account if they actually go towards the regulatory standards. So, for example, if a post is inciting violence or some other criminal offence, then actually that may well be relevant to fitness. So I think that that's helpful, but actually I think that there still needs to be some more thinking around that. Very briefly, the FCA has maintained its position in relation to regulatory references. They've taken out some of the proposed changes to CISC 22, but what they've said is it's very clear non-financial misconduct is relevant and should be referred to in the regulatory reference if it meets the thresholds. And then lastly, as I touched on earlier, what they have done is take out the proposal that firms may be deemed not to be meeting the threshold conditions if they don't tackle non-financial misconduct appropriately. So here's just a very quick overview of some of the questions that are now subject to consultation. I'll hand over to Mary and he'll be talking about that in a bit more detail.
Thanks, Anna. And yes, and I would say this hopefully is quite a helpful slide in terms of consultation questions to think about, because your firm may well have some views on the further guidance. And I'd also say it's actually worth reading the consultation paper itself really carefully, because the press release and some of the other statements about it may give the impression that some of these things are already in place. That they're not. They still want to know what you think about the proposed changes to the handbook and whether further guidance is necessary. So if you can see some loopholes or things where you think further support would be helpful, this obviously is your opportunity to do that with responses to the consultation paper, as Sonna says, by the 10th of September. So just thinking ahead in the time we have left in terms of the next steps, what are the remaining challenges? What could you be thinking about? We all know, as Sonna alluded to at the beginning, it's still hard to know exactly how the FCA is going to react in every situation. At least now we have another indicator of how they're looking to approach it. We know to date that firms have had to use their best judgment internally, but of course what that has meant that one firm's internal view may not necessarily be the same as another. So we've seen different interpretations by firms. And we've also known that firms have actually found it really hard in some cases to play what we've called here on the slide the moral arbiter role. And that is because, and Sonna and I know this because we both have a practice that spans advice to firms, but also advice to senior individuals. And anyone who's had to deal with one of these sensitive issues will also know the consequences for an individual of being found in breach of a conduct rule, with the reporting that flows from that, the regulatory reference obligations on the firm that flow from that, are really, really significant. And as I say, some firms have taken very strict rules to what a conduct rule breach is. Others have, in some cases, shown more flexibility or more leniency. And I think it's still fair to say that non-financial misconduct is a far more nuanced and sensitive and difficult type of financial misconduct for everybody to deal with. But we, as I say, we now know what the FCA think about it a little bit more in the consultation paper. And even before that, both Sonna and I had seen the FCA building on the survey data from last year to call for things like Section 166 reviews of culture and IRs and other inquiries and requests for more information about how firms are dealing with it. So in some respects, this consultation paper and the thoughts in it are not too much of a surprise. What are some of the things that you could be doing now? Actual actions and what we call no regret actions. Obviously, as a minimum, have a look at that consultation paper, have a look at the direction of travel, think about whether you want to put in a response. Building on the point I've just made, could your firm respond to a data request or an IR from the FCA? Have you got your data? Do you know where it is? Do you know who holds it? Do you know who you would need to speak to internally? There's a fair amount of pre-planning that you can do around this. Thinking about what your policies say, your escalation procedures, your governance, and then just generally thinking about how you as an organisation already approach conduct. You may need to talk to your HR colleagues or your legal and risk colleagues about this, but it's about stress testing your disciplinary policies. Do they make clear what conduct could amount to not just misconduct in my world, the employment law world, but also regulatory misconduct? And things that you put out more broadly to all staff, like your values statements and your codes of conduct, do they make really clear what kind of conduct and culture you value? And equally, do they make clear when you will take steps to follow up with people if you think they're not abiding by that? If you do any kind of internal self-certification attestation where you rely on people to tell you about their conduct, particularly things out of office, it would be worth revisiting that. And it's always worth revisiting your regulatory references and your related processes as much as anything else to make sure that you've got accurate data capture. And again, that you would know or have some thoughts about what might need to go into that box G on a regulatory reference for anybody who has been involved in some kind of issues. And I think it's fair to say that both Sonna and I have often had comments, particularly when we've been called on to investigate these kind of issues, that a little bit like some of the high profile ones that Sonna's mentioned, internally, a lot is often known about somebody who does commit misconduct, but no action has been taken to date. And those are the ones that can often be very difficult to defend to a regulator or explain to your stakeholders, shareholders, and the press.
Thank you everyone for joining us this lunchtime. I know it's been a bit of a whistle-stop tour of non-financial misconduct and the new guidance. As we said, and I think we said right at the outset, it would be really, one takeaway is please do read the consultation paper. We will be digesting it further and we'll be hosting another series of events around it, just talking about some of the pressure points on where we still see there needs to be sort of further work done by the FCA. But if you do have any questions, please do feel free to get in touch. Thank you.